Dr. Babasaheb Ambedkar Open University.
Welcome back, friends. We continue our discussion on how journal entries are recorded in journal in the books of Dinesh Corporation. The next transaction that we are going to study is paid rupees 1000 by cash for carriage inward. Now, carriage inward is an expense, is a revenue expense. These account will be known as nominal account if you go by three types of accounts, namely personal account, real account and nominal account. For nominal account, the rule that we have seen is debit all expenses. It is an expense, so account will be debited. If you go by the alternative method, we say when owner's equity increases, we credit owner's equity. When owner's equity decreases, owner's equity minus, we debit account. I have told to you that when expenses are incurred, owner's equity goes down. When income is earned, owner's equity goes up. So in this case, when we incur expense of carriage inward, owner's equity is reduced. Therefore, carriage inward account, which is an expense account, will be debited. And second account to be credited is cash account, which is credited by 1000. Why? Because when we pay freight charges or carriage inward charges, we pay cash. When we pay cash, cash goes out of the business or cash is reduced. Asset is decreased. When asset decreases, we credit that asset account, namely cash account, we have credited. So this is a cash transaction. This is a transaction relating to revenue expense. We have seen how it is being recorded. Let's look at some other information given to us. And sometimes you are given in an examination question information whereby you need to understand whether some transaction has taken place or not, whether these will be recorded in the books of accounts, namely journal, or not. The information given here is placed order for purchase of goods of rupees 50,000 on Rajahans traders, but the goods are not yet supplied. Even if this information about the goods are not yet supplied is not given to you, merely when you are being told that you have simply placed the order with Mrs. Rajahans Corporation, maybe for goods of rupees 50,000, friends, you need not record these because the transaction has not yet taken place. You have simply placed an order. The goods are not yet supplied by Rajahans traders. Until then, there will be no journal entry, and therefore I have written here, no entry is being passed on 20th/11/2014 is no transaction has yet taken place. You need not even write this date. You need not even write that no entry is to be passed, only because we are continuing with the format of the journal comprising of date, particulars, ledger, folio, debit, credit, etc. I have written it here, but you need not even make any entry into the journal for such information given to you. But however, this information may be useful to you when you are being told later on that Rajahans traders has already supplied you goods on so and so date. Whenever such goods are actually supplied by Rajahans traders, you will record that transaction, but not now when you are merely placing an order. Let's look at the next information given to us. Received payment of rupees 5,000 by check from debtor Messrs. Anil Brothers. You might have sold goods on credit to Anil Brothers earlier. Now these Anil brother, who may be your debtor, is paying you some money. He may pay you full amount which is due, or he may pay you in part. But as and when the money is received from debtor, or we are collecting some money against the receivables, the person who was liable to pay, namely Anil Brothers, is a personal account. He gives you money, 5,000 rupees. Therefore, it's a personal account. The rule of personal account is credit the giver. Anil Brothers is giver of the money to you, 5,000. Therefore, Anil Brothers account is credited. Now, what are you doing with these check received from Anil Brothers? Naturally, when you are receiving payment by check, you are going to deposit this check into your bank account. Where have you got your bank account? You should remember that we have Dena bank account. So in Dena Bank account, we will be depositing this money of 5,000. So in a way, we are giving these to Dena Bank. So Dena Bank is receiver of the money or the check that we have given, and therefore we are debiting Dena Bank account. Therefore the journal entry is Dena Bank account debit to Anil Brothers account credit rupees 5,000, because you had received 5,000 rupees from Anil Brothers. Even if you go by your asset plus is equal to debit, so your balance with Dena Bank increases, therefore Dena Bank account is debited. Anil Brothers is it was your asset account, but now because you have received 5,000, your asset decreases by 5,000, therefore Anil Brothers account is credited. Asset plus is equal to debit, asset minus is equal to credit. So one asset, namely bank balance with Dena Bank, increases. Another asset, namely money receivable from Anil Brothers, now that amount is reduced or decreased, and therefore Anil Brothers account is credited. The transaction on 22nd November 2014 is received goods from Rajhan's traders as per the order placed on 20th November 2014. Now, as per the order placed, so in the earlier information given to you on 20th November, you were being told that you had placed order for supply of goods of rupees 50,000. Therefore, in this information, though the amount of 50,000 is not given to you, by linking it with the earlier information, you need to record this transaction for purchase of goods of rupees 50,000 from Rajhan's traders. Now you are not being told whether you have purchased these goods for cash or on credit. Friends, when you are not being told that the goods are purchased for cash, it usually implies that you have purchased goods on credit. Further, the name of the person, name of the party from whom you have purchased the goods is also given, that is Rajhan's traders. So we will treat this transaction as a credit purchase transaction. However, if there is a specific information that the goods are purchased from Rajhan's traders for cash, then even though the name of Rajhan's traders is given to you, it will be treated as a cash purchase transaction. This is an important point to be kept in mind by you. Now let's look at the journal entry that we have to pass. Purchase account debit 50,000 rupees to Rajhan's traders account credit 50,000. I remind you that whenever we are crediting an account, we are writing to that account. So to Rajhan's traders means account means we are not even writing their credit or CR or, but to Rajhan's traders implies that Rajhan's traders account is credited. This is the tradition, and by this tradition we are recording journal entries in the books of accounts. So purchase account is debited because goods come in. Purchase is a transaction relating to goods. Debit what comes in. Or even if we treat goods as an asset, asset is increasing when we are getting goods. Therefore purchase account is debited, and Rajhan's traders account is credited because it's our liability. Our liability increases because when we purchase goods on credit, we need to pay this amount of rupees 50,000 to Rajhan's traders, which is known as Rajhan's trader becomes our creditor, or we say payables. Receivables are debtors, payables are creditors. So Rajhan's trader is our creditor. The person to whom we have to pay money, the person to whom we owe some money is known as our creditor. The person from whom we have to receive some money is known as our debtor, or we call such amount as receivable. Okay, so the journal entry, and in every transaction that we have recorded here, I have shown you the narration being entry for purchase of goods on credit from Rajhan's traders. Because we are not being specifically told that these goods are purchased for cash or by check, it implies that the goods are purchased on credit. Further, because the name of the party from whom the goods are purchased is also given to us. Let's look at other transaction. On 24/11, my dear friends, the transaction given to you is obtained term loan of rupees 25,000 from IDBI Bank against security of machinery, stock and furniture, and check received towards loan is deposited in Dena Bank account. You may need to borrow money from various sources for running your business. And when you want to borrow money, you can borrow either it from bank or from financial institution or from friends and relatives or from any other public mode of borrowing. Now here you are borrowing an amount of rupees 25,000 as term loan. The term loan is usually payable over a period of time, repayable over a period of time, say in after 5 years or within 5 years or in equal quarterly installments within 3 years, for depending upon what type of agreement you have made with the bank. So these money term loan of 25,000 is received by you from IDBI bank. Usually nobody grants you unsecured loans. Of course there could be transactions, but normally the banks are giving you secured loans generally. And what security do they take? Here you have given security of machinery, stock and furniture. And friends, these machinery, stock and furniture, you don't have to give it away to IDBI bank. They would remain in your possession. But you will create a charge in favor of IDBI bank. Charge means in case you are not able to repay these money, the bank will take away this furniture, stock and machinery. They will sell it off and recover their money. So they have got a charge over machinery, stock and furniture, or this is known as a security given for taking loan. Usually when you give movable property like machinery, stock and furniture as security, you hypothecate such assets in favor of the bank. When you give immovable property as security like land and building, you say you are mortgaging land and building. But when you give, as I told you, machinery, furniture, stock which are movable, you hypothecate such machinery, furniture or stock to bank. To hypothecate means to give as security. To mortgage also means to give as security. So you have given stock, machinery, furniture. You need not look at what is the amount of furniture, machinery, etc. There is no need. But you are taking loan of rupees 25,000 from IDBI bank. So this money now becomes payable to IDBI bank. So your liability to IDBI bank increases. When liability increases, you credit that account. So look at the account that we have credited, term loan account credit, or you can name it as term loan from IDBI bank, or you can just write IDBI bank account. But when you write term loan, you know that from IDBI bank we have borrowed these money, or we have taken borrowed these term loan of rupees 25,000, and in the narration we have written being entry for term loan received against security of machinery, stock and furniture. You can also add receipt from IDBI bank, or you can even title this account as term loan from IDBI bank, as I told you. Now which account is debited by us? Dena bank account is debited by 25,000. Why? Because Dena bank is our asset. We have got a current account with Dena bank. Now how do we know we have got a current account? Usually the banks do not open savings account of business enterprises. They open only current account. So we call it, we have got a current account with Dena bank. In Dena bank our balance will increase, because we have deposited check of rupees 25,000 received from IDBI bank towards term loan into Dena bank. So our bank balance increases, our asset increases, and we know the rule: when asset increases, or we say asset plus, that account will be debited. So which asset is increasing? Dena bank, balance with Dena bank, therefore Dena bank account is debited. My dear friends, these transactions are varieties. In business enterprise, when you run a business, you will come across variety of transactions, and I may not be able to tell you about each and every transaction, but you need to practice on your own and study more and more variety of transactions and make yourself familiar. Try it, test it with the help of the rules that we have studied. And then over a period of time, as I told you, with the practice, you need not go to the rule. You will understand immediately, oh, the asset is increasing, therefore asset account will be debited. Whatever asset it is, it may be furniture, it may be machinery, it may be goods, any asset, if it increases, that asset account is debited. And you will master this art. This is very easy provided you take interest. You need to take interest in whatever you are learning, my dear friends. When you take interest in whatever you do, you will not have fatigue. You will not feel tired. You will not feel stressed. You will enjoy doing it. So this is the secret of learning. Learning not only accountancy, not only journal entries, any subject, my dear friends. Keep learning, do more practice, and we will also continue in some other next part, some other discussion about some more transactions. Thank you very much.
Dr. Baba Sahib Ambedkar Open University.